If you have federal student loans and you are behind on payments, the government can take 15% of your paycheck. They can take your tax refund. They can take 15% of your Social Security check, and they do not need a court order to do any of it. But here is what almost no one is telling you. Right now, today, there is a window open that most borrowers do not know about. And when it closes, the rules change permanently for every borrower in this country. Welcome back to Sense and Simplicity. If you are new here, I spent over 20 years in banking as a branch manager and a district manager. Same disclosure as the last video. Once an account got past 180 days, the legal process was handled by teams I never worked with. Federal student loan garnishment is different from credit card garnishment in one major way. It does not need a courtroom. It works under a completely separate set of rules, and you have rights most borrowers never hear about. Sources are in the description. Let us start with the scale of this. As of early 2026, about 9 million Americans are in default on their federal student loans. Another 7.9 million entered delinquency in 2025 alone. Roughly 1 in 4 borrowers with payments due is now behind. The average credit score drop after default is 57 points. That is enough to move someone from good credit to deep subprime in a single billing cycle. This is one of the largest active debt crises in the country, and it is accelerating month over month. Federal student loan default does not happen the day you miss a payment. It happens at day 271. You miss one payment, you are delinquent. At 90 days past due, your servicer reports it to the credit bureaus. That is when the score damage starts. By day 180, you typically get a final demand letter. At day 270, the loan officially goes into default, and that flips a switch most borrowers do not understand. Once you are in default on a federal student loan, the government has powers no private lender has. They do not need to sue you. They do not need a judge. They do not need a courtroom. They just send a notice and start taking. With a credit card, the creditor has to win a judgment first. With a federal student loan, the judgment is built into the loan agreement you signed. Here is where this video is different from every other one you will find. On January 16, 2026, the Department of Education quietly paused all involuntary collections. Wage garnishment paused. Tax refund seizure through the Treasury offset program paused. Social Security offsets paused. Most YouTube videos and news articles on student loan garnishment were written before that pause and have not been updated. They are telling you garnishment is happening right now. As of this video, it is not. But the pause has no defined end date. The Department of Education says it will lift around July 2026 once they finish rolling out the new repayment system. Defaults are still being reported to the credit bureaus during the pause. Your credit is still being damaged every month you stay in default. The pause stops the seizure. It does not stop the score drop. It does not stop interest from accruing. It does not stop your loan balance from growing. That gives you a window, maybe 60 days, maybe 90. Use it. When the pause lifts, here is what is on the table. First, your wages. The Department of Education can take up to 15% of your disposable pay through administrative wage garnishment. They send the order directly to your employer's payroll department. No court is involved. Your employer is legally required to comply within 30 days, and they can be held liable if they do not. Most borrowers find out from their bank, not from HR. The first sign is usually a smaller direct deposit. Second, your tax refund. The Treasury offset program intercepts federal tax refunds before they ever reach you. If you were counting on that refund for rent or catching up on bills, it is gone, and you usually find out only after you have already filed. They can also take federal salary payments and certain federal benefit payments. Once you are in default, the offset is automatic. There is no separate notification. The Treasury just redirects the money. Third, your Social Security check. The Department of Education can take up to 15% of your benefit, as long as it leaves you with at least $750 a month. For someone on a $1,200 Social Security check, that is a $180 cut every month for the rest of their life if the debt is not resolved. They can also intercept federal pensions, military retirement, and railroad retirement payments. This is the part that catches most people off guard. There is no statute of limitations on federal student loans. None. Someone pays into Social Security their whole life, retires, and a 30-year-old defaulted parent plus loan they took out for a kid who is now 50 is suddenly carving 15% off their retirement check. Federal student loans follow you to the grave. They do not go away in bankruptcy in most cases either. Here is what I watched happen on the bank side. A customer's direct deposit shows up one Friday, and it is 15% smaller than usual. They did not get a memo from HR. Their automatic rent payment hits on the first and bounces. Overdraft fee. The car insurance autopay bounces a few days later. Another fee. Within 2 weeks, what started as a 15% pay cut has turned into 4 or 5 returned items, $140 in fees, a late rent notice, and a panicked customer at the branch asking what just happened. On July 1st, 2026, the entire federal student loan repayment system changes. The SAVE plan is being shut down. About 7.5 million borrowers on it are being moved to other plans over a 90-day window that has already started. 2 new programs replace most of what existed before. The first is the Repayment Assistance Plan, or RAP, an income-based plan that prevents your balance from growing if your payment does not cover the interest. The second is the tiered standard plan, with fixed terms of 10, 15, 20, or 25 years. If you are in default before July 1st, the rules for getting out are still the current rules. The same rehabilitation process, the same consolidation process. After that date, you are navigating a system that did not exist when your loan was issued, and the servicers will be learning the new rules at the same time you are. Borrowers who act now get the old, well-documented system. Borrowers who wait get the new one, with all the rollout problems that come with it. There are 2 main ways out of default. The first is loan rehabilitation. You make 9 monthly payments based on your income, sometimes as low as $5 a month, and after the 9th payment, the default is removed from your credit report entirely. That is the only path that actually erases the default. Late payments from before still stay, but the default itself comes off. Rehabilitation takes about 10 months. It is the slower path, but the credit repair is real and lasting. The second path is consolidation. You combine your defaulted loan into a new direct consolidation loan, and the new loan is in good standing immediately. It is faster, about 4 to 6 weeks, but the original default stays on your credit report for 7 years. Faster relief, less credit repair. Slower process, full credit repair. Both options work for different people in different situations. The next video in this series goes deep on which one fits which borrower. Here are 3 things to do this week. 1. Log into studentaid.gov and check your loan status. A lot of borrowers do not actually know if they are in default. They just know they have not paid in a while. Pull the actual record. 2. Call your loan servicer or the default resolution group at 1-800-6-213-115. Get your exact balance, your default date, and your options in writing. 3. Do not wait for the pause to end before acting. The borrowers who get hurt worst are the ones who treat the pause as a vacation. If your situation involves credit card debt instead of student loans, the rules are completely different. I covered that in the previous video. Wage garnishment for credit card debt, here's what they can actually take. The link is in the description and on the card above. Your action step. If you have any federal student loan, log into studentaid.gov today and check your status, not next week. Today, the window is closing and it favors people who move first. The next video in this series goes deep on rehabilitation versus consolidation. Which one fits your situation, what each one costs in time and credit impact, and how to start either process this week. Subscribe so you do not miss it. And remember, the system works fastest against borrowers who do nothing. The pause is a window, not a vacation. Use it while it is still open.